Process of actually fulfilling the execution of the 30-day example. Okay.
Okay.
So remember, the monthly payment is $80.
Right.
Okay. And then we're gonna go with $349. Okay. So let's say as soon as you give the customer the $349, most likely they're gonna give you some negative. So you're gonna tell them, look, let me give you a quick example. It's called 30-day example. Okay. And this example is gonna help you understand exactly why insurance companies are requesting the $349, okay? Instead of just your monthly payment. So what you're gonna do is you're gonna do the math. Now you're gonna grab 100 customers, okay? So you're gonna calculate 100 times 80, and you're gonna tell the client, look, if the insurance company requested only the monthly payment of 80, this is how much they would be collecting, okay? Out of 100 customers, of course. So 100, let's do the math, even though it's just basic math. So it would be 100 times 80. So we're looking at a total of $8,000. So tell them, if the insurance companies allowed you to make to start your policy just with the monthly payment, in this situation they would be collecting $8,000.
Right.
Now, 5 customers, okay, averaging $4,500 worth of damages. Okay, remember, if 5% out of 100 are involved in an accident within the first 30 days, averaging $4,500 for basic damages, we're looking at $22,500. That is the total that the insurance company is going to pay out of pocket.
Right.
Okay, let's put out of pocket. So, so in this case, this is premium. Okay, so in this case, the insurance company, okay, if we do the math, $22,500 minus $8,000, the insurance company is literally losing $14,500. Does that make sense?
Yes.
So who's gonna be at a loss?
The insurance company.
The insurance company, right? Because they're losing $14,000. That means they could encounter, they could go bankrupt because they're losing money every single month. Now you could also emphasize on the fact that, look, we're just doing an example based on 100. What if it's 100,000 customers?
Yeah.
Those numbers are going to be catastrophic. They're going to be ridiculous, okay? So you emphasize on the fact that an insurance company offering an option of activating your policy with the monthly payment only is going to roughly collect a total of $8,000. That's for the premium. But based on 5% of customers being involved in an accident, averaging $4,500 worth of damages, is going to cost the company $22,500 out of pocket. So that means negative of $14,000, $14,500. So the insurance company is going to be
In a tight spot.
they're going to be losing a lot of money.
Yeah.
Okay. Now you're going to emphasize on the fact that the reason why insurance companies are requesting $349, and you're going to tell them we're going to do the same math. So $349 times 100, right?
Mm-hmm.
Because it's still the same example. So we're looking at $349 times 100. That's a total of $34,900. Okay, premium. We're going to use the same example as far as the 5%. Okay, so it's going to be 5 multiplied by 4,500, which equals a total of 22,500. We're not doing the math because we already did it earlier. Okay,
Right.
so now let's do the math. 34,900 minus 22,500. That's a total of $12,400. So they're positive now. Okay, so the whole purpose of the insurance company, okay, is to collect enough money. In this case, they're requesting $349 times 100. That's a total of $34,900. Okay, and they're still going to pay $22,500 out of pocket. So in this case, they're being positive. So they have $12,400 positive instead of the other scenario where they just require the monthly payment where they're $14,000 negative. So an insurance company is going to require, okay, a little bit of money to open up the policy. So just in case something happens within the first 30 days, then at least the insurance company is not losing their money. And just think about it. Look, let's say it's a major accident. We're looking at $20,000 of losses. Your situation is only liability. But let's say, for example, if someone is insuring a vehicle, let's say for full coverage for $20,000 and the vehicle stolen, the insurance company is going to pay those $20,000. So even though they're positive 12,400 in this example, you're gonna emphasize on the fact that, look, for this 100 customers, they may be positive, maybe for the next 100 they're gonna be negative. So they're gonna collect as much money as possible to balance their losses, okay? So once again, the reason why insurance companies are requesting 349 today, okay, is number one, to guarantee coverage. You're gonna tell them, look, if you leave with insurance right now, and you hit a vehicle for $2,000, would you want the insurance company to cover the $2,000, or for them to tell you, look, we could only cover 30%, 40%?
The full amount.
The full amount, right?
Yeah, of
Because you're
course.
leaving with the impression that you're covered. So therefore, the insurance company is requesting a little bit more today for the fact that they want to make sure that they're also protecting themselves, okay? They want to balance their losses with the premium that they're collecting. The more they collect today, the more money they have to pay for the losses.
Right.
Does that make sense?
Definitely.
Okay.